Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG55 cash equivalency example 1 content. Notes print. Leave a comment. Cash equivalency example 1 content. The calculation we did on the previous page is indeed correct from a mathematical standpoint. But we have heard over and over that we should not apply strict mechanical methodology, but should adopt the thinking of the marketplace. I realize it gives comfort to an appraiser to be able to point to a real number as justification. However, please do not make a cash equivalency adjustment of $16,386.13 in this scenario. It is more correct to interview buyers and sellers and adopt more of a layperson's standpoint. If the typical buyer would think this is a pretty good deal for $5,000, then that's the number we need to use for an adjustment. End of page. Chapter start. 33%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG56 cash equivalency, example 2. Notes print. Leave a comment. Cash equivalency, example 2. If a mortgage loan is assumed that is at a lower interest rate than the market rate, the theory is that the buyer will pay an above-market price for the property equal to the difference in the monthly payments over the typical life of the loan. Example, John Smith buys a property for $140,000, puts $40,000 down, and assumes the $100,000 mortgage with 20 years remaining that is at a below-market rate. Suppose John is paying $1,000 per month, rather than $1,200 that would be required for a new mortgage. $1,000/$1, 200 equals 0.8333, or a monthly payment that is 83.33% of the market rate payment. You would then calculate the cash equivalency of the sale by multiplying the remaining balance of the assumed mortgage. $100,000 x 0.8333 equals $83,333, or $83,000 rounded. The cash down payment is added to this number to arrive at the calculated cash equivalent sale price. $83,000 plus $40,000 equals $123,000. But it's not always this simple, as we will discuss on the next page. End of page. Chapter start. 33%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG57 cash equivalency example 2 content. Notes print. Leave a comment. Cash equivalency example 2 content. Based on the calculations on the previous page, the appraiser, who is using this sale as a comparable, would then assume that the market value of the property was actually $123,000 and not $140,000. The problem with this method is obvious. Was the sale price actually $17,000 above market value? The appraiser must only adjust for the portion that was above the actual market value of the property. As you can see, this method might be fun math for some, but is not practical, because you must still use comparative analysis to determine what the actual adjustment should be. There are other quantitative methods that involve using several methods of discounting. The problem with all of these is that they are not a direct measure of market reaction. End of page. Chapter start. 34%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG 58 sales or financing concessions reporting. Notes print. Leave a comment. Sales or financing concessions reporting. There are specific directions as to how to report sales or financing concessions on the URAR in accordance with the protocols of the Uniform Appraisal Dataset, UAD. Sale or financing concessions. Note, this field, comprised of 2 lines, is used to capture sale type, financing type, and any concessions. The information must be entered on line 1 and line 2 as indicated. Line 1. The appraiser must indicate the sale type for each comparable property. If more than one sale type applies to the comparable property, the appraiser must start at the top of the list and identify the first sale type that applies. The valid values are abbreviated entry sale type, REO sale, short sale, CRT or court ordered sale, estate sale, relocation sale, non-arm's length sale, ARM-LTH arm's length sale, listing, end of page, chapter start, 34%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG 59 sales or financing concessions reporting, conted. Notes print. Leave a comment. Sales or financing concessions reporting, conted. Continuing with the UAD instructions for reporting sales or financing concessions. Line 2. The appraiser must enter the financing type from the list below and the total amount of concessions, if any, for each settled sale. If there are no sales or financing concessions, enter the numeral 00. Abbreviated entry financing type. FHA, VA, CONV conventional, seller, cash, RHUSDA rural housing. See instruction below other, appraiser to enter a description of the financing type asterisk. Asterisk other, if the financing type is not on this list, the appraiser must enter a description of the financing type. The text must fit in the allowable space. Note, below market financing can have an impact on market values, and therefore is of particular importance. A variety of government programs, such as state and local bond programs, provide below market financing. The appraiser must indicate if sales transactions with below market financing are used for comparable sales. Reporting format. Line 1. Sale type. Appraiser must select one value from the specified list. Line 2. Financing type. Appraiser must select one value from the specified list. Description of other financing type, if applicable, text. Concession amount, numeric, whole numbers only.